Hello traders, it's Samurai Trader here. Welcome to session 129, live trading the ES. So this is hot off the press. That is, I've only just executed these trades a very short time ago. And as always, to start this off, this is how to day trade any market. It doesn't matter whether you trade futures, forex, or stocks. You apply the exact same setups, the exact same patterns to any market. As always, I do need to pull up the disclaimer. There is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you're consistently profitable. Now, very quick advertisement. Stick around, by the way, because I'm going to really dive in deep on some of the setups today, and I'd like to show you my measured move indicator and what you can do with it, how powerful it can be. So hang around. I'll be really quick with the advertisement. What do they say? Support those that advertise with us. Anyway, if you haven't already, you can download the Truth About Day Trading and also my training manual. You'll see the description link below. As well, you'll see me refer to a spreadsheet in a couple of moments, which plays a very valuable, very important role in my trading. And you can actually download that spreadsheet as well, along with a video I recorded on how to actually use it for setting your goals, and how I actually calculate what my average target is per day. Make sure you subscribe to the channel so you're kept up to date. Also give me a big thumbs up too, please. So subscribe to my channel so you can be kept up to date, and better still, why don't you become a member? Everything you see here today for $297, all of my indicators, there's over 15 strategies, there's over 35 PowerPoints. We've got a brand new members area. You get lifetime access to the members area. It's literally a gold mine, and I'm adding to it regularly. That is, I'm a researcher, so I'm researching these strategies, looking at, is there any way of improving what I already do, the psychology of trading. I've even hired a trading psychologist to record some hypnotherapy sessions for my members. So all of that for $297, lifetime access. And as a bonus, you gain access for 1 month to my coaching room, or at least 8 sessions. So over those 8 live, they're also recorded if you can't attend. I run them every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. We cover everything you'll see on my charts, everything from psychology in trading, money management, through to how to trade my setups. Now, if you wish to continue after month 1, you can drop me an email for $197 a month. You can then subscribe, but that's an option. Okay, so you've got to email me if you wish to continue, but it's only $297, no other commitment, lifetime access. Let's now get into it. Now, what you'll notice is most of my trading is what I call scalping. I'm in and out within minutes. Now, today was very fast, as you're about to see when I pull up the recording and show you, and I'll be explaining the trade setups. Now, my concept really, or the concept, is to get in, get out, get paid. I also very much want to have a daily target, hit that target, and finish for the day, as you'll see in a moment as well. So looking at this, we're on the 2-tick ES. Now, with the speed, you'll see in a moment on the recording with these trades just here, it really, you should not be trading around that time, at least on a 2-tick chart. So this is what we call a 2-tick Renko. You can trade with any type of chart you choose, whether it be a time-based chart, whether it be tick, whether it be range. In this case, of course, it's a Renko chart. I prefer tick and Renko charts. So what you do, if you're in a very
fast market, you can increase the time frame or look for another market to trade. For an example, I was asked very recently, why haven't I been posting many videos on the ES or NQ? Because of the speed of the market. With
with the tariffs and other things that are going on in the US at the moment, the markets have been very volatile. So even though they affect the currency futures markets, I much prefer the currency futures at this stage because they're slower and in my opinion easier to trade. However, the ES has got the greatest volume. Okay, we see typically around 1.5 million contracts traded a day. I'm trading after hours during what we call the Globex session. So we can see here this is 1931, 7:30 Central Standard Time. The great thing is if you're in the US, for an example, you can have a full-time job, come home and start day trading. Okay, so you've got incredible flexibility because you can trade these markets 23 hours a day, 5 days a week. So let's just quickly talk about targets and then we'll get to the recordings. And if we got time, if I can keep it under 30 minutes, we'll even have a quick look at the charts and what's setting up right now. Why do I have a target? Well, I've discovered over the years that this is so true. Quote by Earl Nightingale: people with goals succeed because they know where they're going. They have clarity, and clarity is absolutely critical as a trader. And as I mentioned here, I also believe in the power of quitting. So the clarity is I know exactly how much each day I'm targeting. It gives me a goal to go for that feels good for me. Now if you're a young gun, I'm in my 60s. As a young gun, you may choose to go for a much larger target. Now also you'll notice that my daily targets are based upon the funds required. Okay, for an example, on the next slide here, I'm trading with an 8-tick stop in this session you're about to see. I never risk any more, or I recommend you do not risk any more than 2%. As you grow your account, you want to lower that down to 1%, but initially, until you say trading 5 contracts, 2% is fine. But larger accounts, you want to lower that risk. Remember, you are effectively a funds manager. You're running your own funds management business. Now if you've got an 8-tick stop on the ES, which is $100, you need $5,000 to do this correctly. Now the great thing is though, if you don't have 5,000, so don't switch off, you'll see in a moment you can trade the micro contract where you only need $500. You may even choose to use and go with a prop firm. We've got many members now that trade with prop firms and use their capital, and I think typically they charge or they pay between $50 and $150 a month for the right to trade a $50,000 account. Now if you wish to increase your stop loss up to 10 ticks, you'd need 6,250. The reason you might want to increase that, I use an entry chart and an anchor chart. If I'm waiting for my anchor chart one candle to close, which I'll show you on the chart, I may require up to a 10-tick stop. Today I used a fixed 8-tick stop because we had a lot of momentum. Now I mentioned that the target there then is 250 a day on a 5,000 account. How do we achieve that? Well, typically if you're going for 4 6-tick trades, that would be, and that's net after any losses, that would be $300 less $20 in commissions. It's actually a bit less than that, but let's just round it off at $5 a trade. That would be $280. Now as you're about to see, you'll get different figures here because sometimes I'll cut a trade and we might hit a pivot as an example and exit a trade earlier. Sometimes I'll go for a larger target, but overall this is a sort of range you want to be looking at and saying, okay, I only need 4 golden trades a day. Now I mentioned a moment ago, what if you don't have $5,000? You start on a micro. Now this is where a lot of traders, they'll just stop watching this video. They don't want to know about this and they wonder why they never make it, and they forget that I make these statements, or perhaps they get so peeved they'll just switch off straight away. But this is critical. This is a business. What if within 30 weeks, traders, you could be earning $10,000 a week. Would this be worth watching or listening to, taking some of my advice? I've been trading now for 28 years. Absolutely. So please, just for a couple of minutes, really absorb what I'm stating here. If you start with a $500 account and go for $25 a day, that is 20 ticks. That is 20 ticks net a day. So only 20 ticks a day will net you. That's net ticks, that's after any losses. Now if you go for just that $25 a day, and how this compound table works, many of you that watch my channel already know this, that here you'd be earning 125 a week, 25 a day, and every time you double your money you can start trading an additional contract. So for each $500 you build up in your account, you can now add to the position, and you're never risking more than 2%. Traders, I can show you some incredible tables here that'll show you'll be a multi-millionaire within months. But this is using the market's money. But not only that, you're building both confidence and competence in that time. Now within 12 weeks there, you've actually potentially got an income there of $1,200 a week trading 11 micros. You've now got 5,775, so we can now roll over, put our 5,000 in our account, go for 250 a day. You see, a micro is 10% of the value of a big contract, so we want to go for 10 times that. So on a micro contract, each tick value, each increment price moves, it's worth $1.25. On the big contract, it's $12.50. So what we can see here, in a further 12 weeks, we're now earning potentially our $12,000 a week. Our capital's now $57,000, all based upon earning 250 a day, or 20 net ticks a day. Now of course the big question in a moment is, how do we do that? Well, I'm going to be showing you that. So if you start with a micro, and this gets down to setting a goal, because perhaps you've blown your account a number of times. Perhaps you've found trading difficult up till now. Perhaps you don't know how to trade and you're a brand new trader. You've got to have a plan of action, something to work for. You've got to have that compelling future. Now here, even if you've got $5 or $10 or $20,000, starting this way, you're building a solid foundation, and you go from there. Like here on 25 a day in 12 weeks, account size potentially is up there at nearly 6,000. And legally, traders, I've got to say potentially, I can't control the sort of trading you do. You now switch over, and where 5,000 is required, another 12 weeks. So that total time is taken is 24 weeks. Now let's allow 6 weeks when you first start learning my setups. Okay, so you're going to allow, say, 6 weeks on the simulator before you go live. Where will you be? And that would now makes it 30 weeks. Where will you be from today financially in 30 weeks? You're seeing the huge potential here. Now, by the way, what I want you to also be thinking of is the logic behind my setups. See here, and you'll hear me say follow the gold. Okay, up here I took a reversal trades, otherwise the other 3 trades were trend following trades. What's the logic here? Overall, until we get major divergence, or what I call reversion to the mean, we're going to trade with the trend. We're going with the flow of the river, and the logic here is rock solid. It's been around forever and will always be around, trading after retracement in the direction of a higher time frame. For an example, see this black line down here? Just mention this now. This is actually a time frame on this is an EMA on a higher time frame. See how we're bouncing off that? We're actually bouncing off the R2, which is a pivot, and we're bouncing off this major support level. We bounce off it every single day, and you'll see on the live video I already hit my target by then. You'll see me going like this and pointing this out. putting that in, and we'll go. And actually what happened, I actually hit stop record, I finished video, so I've recorded a second video straight after. I'll show you that in a moment. So this is what I call a predictive setup for members watching. It's also well, there it is there, a T3 pivot bounce. Now what I'm also going to be showing you here is a little tool that I use. Now traders, having one or two reasons for taking a trade is good. Having 5 or 6 is even better. So I've got a little tool that I'll use, a measured move indicator, which will plot all of these levels here. By the way, I don't sell my indicators, I give them away free to my members. But here you had in Fibonacci retracements and extensions, there's nothing new. As Gann famously said, by the way, there's nothing new under the sun. But here I put it back, so 50% retracement, hit the 23, then we hit 68, then we bounced off the pivot. I plotted it again, it was a 50% retracement, and down we go once again. Here is another example over a larger area, and look at this right down here. See how at the minus 23 you bounced off it, found a bit of support, then you bounced off the minus 61. These levels, traders, if you can use the indicator as you trade, and we hit both levels spot on, but it's a tool, okay? And it's not, I don't base my trading on it. However, if ever you get a retracement, a pullback, or a measured move, and you've got one of our setups, and you say use the measured move indicator, it just helps add to the probabilities of the trade working out. So let's go to recordings, but just before I do that, here's what generally I'm also looking at. Where are the pivot levels? Where are the prior open, high, low and close levels? Where are the major EMAs, intraday swing highs and lows, and the current day's high and low? And the reasoning for that, traders, these levels become major support resistance levels, and we bounce off them, and they act as price magnets. If you like, they become a self-fulfilling prophecy. They really do. So let's go and play video 1. Now this is only short because I had no intention of recording. So what actually happened, I just starting to set up to record here, and just looking at the trades here that were ready. So I've marked these up, just trades that I would have taken. Then I had a setup right here, okay, ready to go for it, and I thought I'll record it. The market then went bang. I was filled, it hit my target, and I wasn't filled, hit it right to the tick. So it had an 8 tick target, as you can see there. So what you just probably missed then, the market just went bang as I was hitting record, and it hit my target. So just so you understand this, when we trade, we're actually in a lineup. I'm in a lineup behind other traders. So if other traders up here already had their orders in front of me, and there weren't enough buyers or sellers up here, you can see here that it hit my target, but I wasn't filled. Okay, so I was really spitting chips at this stage, and I thought, no, I'll stay with it. And the reason I stayed with it, we had this fantastic, oh, here it is just here. What I'm doing just there is looking at what I call my anchor chart. This is my anchor chart 1, and if you look at the gold EMA, you can see here we're in a beautiful uptrend. That's why I stayed with this, but I was also about to get some divergence, so we'll see that in a moment. So we're just waiting here, and in a moment you'll see it just takes off again, and that's really a warning sign, by the way, to be very careful when you've got very fast moving. Look at that there, that was the speed of the market, by the way. So that wasn't sped up or slowed down, that's actually how fast the market actually moved at that stage. Now just up there, by the way, let me point this out. you'll for those that are either members watching this or others, you'll hear me talk a lot about black box thinking. And what's that about? What is this about? Now remember what, let me get the grammar right here. What exactly do I mean, and how do we apply it? Well, black box thinking, most of us know what a black box is. Winning traders are willing to do the things that losing traders won't do. One of the things is going back over our trades at the end of the day. What can I learn from this? What will I do differently next time? Now, in this particular case, I jumped in too early. Hence, my stop loss was way up there, where on the ATM, on our trade management on our platform, it will manage our stops and targets automatically if we choose to, if we set it up that way. Now, I didn't mean to enter so early. I was waiting for it, and I went to put a limit order in to sell, but I didn't put it in correctly, and I got filled immediately. Why? I was looking at the chart and wasn't looking exactly on the dome at the time correctly. So no, it was the keypad, sorry, the my keypad here. So anyway, easy to do. Now, it's a beautiful winning trade, and even if I had been in at the right time, it was still a wonderful trade, as you're about to see. The point here is, what can I learn from that? Traders, just make sure sometimes, even if it's fast, got to slow down, look at where you're placing your trades, look at your figures, etc. Now you'll see here I've gone to break even just there, so I'm managing my stops here manually. I've got my stop loss and I got filled. Now I shouldn't have actually been in that trade until up here excuse me, which I still would have hit, well and truly hit my target. Now here I've just taken another trade. Now for members watching this, this is basically a T10, as you can see. So I jumped in here and I only scalped a couple of ticks out of this. Now on 8 lots, that's still a pretty good return. 8 lots by 25 by 2-3 ticks a trade. The reason I decided to get entry, well actually let me take that back. I actually only got out one or two ticks out of that. Well, there you have it. So I take that back. So I only actually averaged about 1 tick out of that. So I got out a little bit too early out of that trade. But anyway, reason being, I could see it looked like the candle was going to reverse, and we still had quite a strong uptrend. So anyway, it's better than losing money. So I got out of that one, and I'm now waiting for another setup. So I'm out of that one. Price is coming. I'll just move this along, and just here I'm considering another trade. And notice here I'm down at a major EMA. I was watching my anchor chart 1. See those tails just there? They're what we call trend continuation signals. That's where the buyers were trying to take back over. So I was thinking, and I could see down below there was a pivot not too far away. So down below we can't see it just here, but there's a pivot. So I'm thinking I might just very well sell down here, and in a moment you'll see this. I'll put my order on. I think I used a market order. I can't really remember what I use here, but notice these tails. This is a giveaway. Okay, so when you've got the Renko tails, a trend continuation. So there we are. So now I actually used a sell stop order there. So now I've got a target, and I'm looking at the pivot down below. Now I haven't scrolled up yet, but usually you'll see me scrolling up and down quite actively, checking out where the pivots are. Now there it is there. That's typically, and here I've increased my target then by a couple of ticks. Why? These become price magnets. selling and buying into pivots. We actually call them pivot magnet trades, or T28 setups. So we're just waiting. I might just hurry this along because we're running out of time. We're up to 25 minutes already. If you weren't already in that trade, you've just had a trade entry just there anyway. Okay, and down there I'm out of that trade, and we've now hit the pivot. Now this is where we're about to get a T3 pivot bounce. Now a T3 is a reversion to the mean setup. Now just see that there. I'm checking out the anchor chart 1, which is in a nice uptrend still. I do have a little bit of divergence just here, but the big thing here is it's a reversion to the mean, and all of my setups are rules based and pattern based. Do I have a pattern? Does it meet the rules? So this T3 right here, I'm just checking out all the rules on it, just doing a quick measurement on some things that I've discovered that are really important with it. And yes, it meets the criteria. So I've got a T3. Now I've already hit my target, by the way, so I'm not going to take it, but I've marked it up, and this is where I carelessly hit the finish video button in a moment. So I'm just, and I went across it and bang, that's when I did that there. So let's now go to video 2, because video 2 is where I want to point a couple of things out for you. So that was the T3 I pointed out, and we rallied up there. Thank you very much. Now what I then did is, this is where I then applied the measured move indicator. Okay, so here that was an exact 61% real, thereabouts, close enough. Looks like a duck, quacks like a duck. It's a duck. So we had the retracement, and I want you to notice here how it measures extensions. Okay, so this is a retracement level, and we can see the extensions right there. So let's now just quickly move this along a little bit, and you'll see that in a moment we'll go up there and hit that target. But here's what's important, traders: what happens after we hit the target? Your best target is the minus 23. Okay, and you could say plus 23 if you like, because it's beyond the 0 line, so you can add to it if you like, but it's sort of opposite than a 50% retracement, and we call these measured moves. Now just there, notice here we've hit that level, and as I said, I've already hit my target for the day, but I wanted to show you how effective this can be. Now I'll just speed along here, because watch what happens in a moment. Okay, so we're about to hit our final target, which is put in mechanically. Now to use these levels, by the way, you go from your last major swing low or swing high. So we're using major levels, but as you're about to see, watch what happens here. We've now hit it, we've ticked through by a few ticks, and now we reverse. So measured moves can be very, very powerful when it comes to day trading. So, and I just want to show you, let's just have a quick look at where price action is right now, shall we? And let me just turn this off. Let me just remove that. Now for an example here, let me just get rid of these ones we've got just there. Here's what I would do. I simply just would go boom, boom. Where's my last major swing low? There it is there. So you can see there I've gone up to the 23. We missed the total swing high by 3 ticks. So we missed that level by 3 ticks, but we hit 2 other levels on the way up. What are those 2 levels? 0, 0. So see how you had your retracement, and note there that was an exact within a fraction of a tick, 78.6. I'm only interested in retracements. If you're interested in Fibonacci retracements, a lot of traders say never go past 50%. Well, that's boohoo. It's in fact 70.7. Larry Pesavento has written extensively about, who's very famous on Fibonacci patterns. 70.7 is a very reliable level, back to 78, as long as we don't go any deeper. But then you can see we hit our first target and then potentially your first. Let's now look at this one just as an idea for you. There to there, we draw it back there, and look at that. You wouldn't believe it. Look at that level. Now this is live. Look what you hit. I was just talking to you about the 70.7 level. Bang, we've just hit that. Now our entries down here, you've got two potential, well, that's incorrect. There's three potential targets: this one, and this one. And of course you could take it anywhere. I mean, you can go down. Where's our last pivot? So right, come all the way down to here, and to remove the noise, we call it, you can apply this to your anchor chart. Okay, so if you wish, you can go and apply it to your anchor chart 1. Now, as always, you follow your money management rules. It's not going to win every single time, but if you're scalping the market, this can be just a fantastic addition to your trading. Whoops, I'm about to do a recap on some other trading I was doing for our members. That's not what we want. So we want, where are we? Sorry, trader, I'm just trying to get the right PowerPoint here. Okay, so in closing, look, we've covered a lot of information. The key thing here is the ES is a great market. We've got to watch the volatility during high volatile times, such as right now. Volatility is good, but it also can be your enemy. So if a 2 ticks too fast, you might need to jump up to a 3 tick, or jump up, say, to a 550 or a 610 tick if you're trading a tick chart itself. So traders, as I mentioned, for $297, you can get all of my strategies. You can attend my training classes for a month. There's actually over 200 videos in the library now. You don't have to watch them all. And what is really important is I train you in, and you only focus on 2 or 3 strategies to begin with that are trend following. Okay, very important. You focus on the key strategies, and they are trend following. Anyone that's committed can master this. All right, traders, I've spoken enough. We're up to now 33 minutes. Go back and watch the video. Better still become a member. But there's just some great ideas, and if you haven't picked them up, shame on you, because I shared some great ideas with you today. All right, traders, see you on the next video. Thank you.